All right, guys, great. Next up, we have on stage IDEXX Laboratories, the worldwide leader in animal health diagnostics, and joining me on the stage is the company's CFO, Brian McKeon, down on the left, and Mike Lane, EVP and General Manager, Reference Lab and Information Technology. Long title, hopefully I got it all.
You got it.
Congrats. Thanks, guys, for doing Jaws and Paws again this year. I'm gonna start where I probably get the most questions, and it's around visits. And a lot of us can see the data. I'll run some numbers by you. For 2Q to date, the data source that we use has clinical visits essentially zero. I mean, down 0.1%. I went back and I looked at this same source has run an 8-quarter average that's roughly 50 bips better than your clinical visit results. So, Brian, I guess the good news is, seemingly better than the 1Q24 exit rate that you guys talked about. That was down 1.5%. But still below IDEXX's long-term build or LRP that you guys talk about, which is plus 3%. You talked about capacity constraints, macro headwinds. Maybe just help us out. Is it more one than the other? Has it evolved when we think about those dynamics that seem to be pressuring visits?
Yeah, thanks, John. So I think in terms of clinical visits, as you pointed out, that's one kind of contributor to the overall growth equation for the company that's been more dynamic the last couple of years. If we could set some context, we had, historically, in the U.S., 2 to 3% kind of same-store clinical visit growth for a number of years. During the pandemic, that jumped up to about 5% annually. We went through a transition in the U.S. In 2022, 2023, where we saw a pullback in capacity at the clinics. I think that was a key dynamic. There was likely some lapping of sort of the puppy boom as well, just in terms of adapting to some of the unusual things that went on during the pandemic period. And we, in fourth quarter of last year, we saw a relatively flat clinical visit trends. We knew that we were still working through some of the dynamics with the clinics on just managing staffing and helping them with that aspect of what is an ongoing kind of evolution, I think, for the clinics, just to adapting to the higher level of demand and other things that are going on, just the labor market. And to your point, I think we saw a relatively softer than expected visit trends in Q1 coming out of the quarter, down about 1.5%. I think the staffing continues to be, I think, a constraint to growth. I think that's the right way to think about it, is that it's something the clinics are still working through. I think we're engaging actively with them and bringing productivity solutions and trying to new innovations that will help manage that over time. And we see a lot of positive factors to point to, and just in terms of the optimism around the sector and willingness to invest that we think will be helpful over time. There may be a consumer impact here that we're seeing. I think as we've discussed many times, we kind of pay attention to things like wellness versus non-wellness trends. We might expect to see kind of consumer impacts a bit more on the wellness side, just a little relatively more discretionary. I think in the second half of 2023 and into Q1, it's somewhat softer. So I think that could be a factor. And I think the broader theme is our business and the sector is incredibly resilient, but we're not immune to consumer impacts. And there's been a cumulative impact of inflation, I think, on consumers that may be affecting demand. But net, we try to capture that in the near-term outlook, and I think continue to be very optimistic about the longer-term view in the sector, and hopefully we'll see a stabilization of those trends like we expected in the second half of this year.
And that was great. That was great color. I think every quarter we do our surveys, and we usually ask the vets if they're optimistic or pessimistic, and most are optimistic. Then we pipe them in, and we say sort of, what's the thought behind that reasoning? And I'll do something with my hand so no one on the webcast can see. But initially, there were constraints around capacity were sort of front and center, and macro was behind that. And now it seems like it's gone the other way, where macro seems to be the main headwind. Capacity is still an issue, to be clear, but maybe taking a little bit more of a backseat. What's your reaction to that? Do you think that has swapped a little bit over the past 12 to 24 months?
I just building on what I said earlier, I think it's pretty much what you're saying. I think staffing and capacity are still a constraint, and I think there may be a macro impact here that we're seeing at the margin. I think the bigger theme is it's an incredibly resilient sector. we're growing well, we're delivering good financial performance, and as we continue to invest, and we're excited about the innovations that we're bringing to the sector, particularly in the coming year. And so, and against a backdrop where we're expanding instrument placements, and I think our customers are to your point, optimistic on what demand, how demand can evolve over time. I don't know if you want to.
Yeah, let me add a little color,
Sure.
John, to your comment there. As an example, I was in a large veterinary specialty referral hospital last week, but I think it's representative of what we see across the sector. This hospital had a major ER practice, full practice, so growing demand, but a bit constrained in the in the ER from a staffing standpoint, 2-hour wait. But these pet parents are waiting patiently, and you can just feel the bond that's in the room. And talking to the hospital director, the medical director, they're focused on growing productively. They're using IDEXX point of care, real time. In this case, you can picture sick patients, such value of having those results right there in the practice. But they also use the reference lab as an extension of the practice in terms of helping to manage some of those staffing constraints. And then they've got IDEXX practice management software bringing it all together. So I think it's representative, and it's why we're so focused on helping practices with innovations like InView, with Velo, these innovations that take work out of workflow and make it easier for them to meet this demand at times when they have that constrained staff.
Okay, great color. And guys, as always, if you have any questions, just throw your hand up or even shout out. I'm going to pivot and do a little bit of Kate.
Quick comment here.
Yep.
On the specialty veterinary referral at the ER, we typically see 2 hours would be a really short wait. We see it 4 or 5 hours. People having to literally come back the next day.
Yeah, there's certainly, so it's 2 hours, but there's some people that leave, right? And this particular hospital tracks that. They may go down the street to a different hospital. This was in a metropolitan area.
What do you see across, obviously you've got a huge network of hospitals and people that put your product out there. What do you see across that? Is it too typical, or is what we're seeing typical? Long ways, and especially as we heard in an earlier presentation, that's not really one of the work weekends either.
Yeah.
So
I think that.
not being great either.
I think that's accurate. I think we continue to see pent-up demand. This is a theme that we've been talking about for a while. I think the key thing we're trying to highlight, there was a dynamic that was going on with a pullback in capacity. I mean, a reduction in hours. I think we've moved past that. But I think
Saturdays being pulled back. Or
right. And that was a very thing that we could see in the data. We have access to PIMS data and could see the operating hours for the practice. To your point, I don't think that there's been the theme hasn't been, oh, that's coming back. I think there is an ongoing kind of management of capacity dynamics and ongoing, management of this, staffing in a more challenging environment. And there's a range of kind of how practices are adapting to that. So I think to your point, we continue to see, we saw a 10% expansion in the pet population. So we know that there's a lot of pets out there, and they're owned by people that increasingly care about pet healthcare and have a humanization of their relationship with the pet. So we definitely see this as a long-term favorable trend, and I think some of this is just helping the clinics to adapt, and we're seeing our customers leaning in more here. I think organic volume growth is becoming a more important theme, for practices. I know you're going to have some folks visiting today to talk about how they're managing their businesses, and I
It's got a massive opportunity though, right? Because if you look at where you're positioned and your point of care solutions and the instrumentation, that's the opportunity, right? The opportunity to circumvent some of these staff shortages, et cetera, et cetera. So quick question on that is, from the point of care, what initiatives are you taking to train the staff in these places so that they're up to speed as quickly as possible and running it? Because this is a model we've seen work in instrumentation businesses that I've been involved in for many years. Actually not relying on the hospital or the staff themselves, but going in there, making sure that it's a 6 weeks up,
Yeah. Want me to take that?
Yeah, please.
Yeah, we do that. We do that. A big part of our commercial engagement model are just not sales professionals, but also field support that follows and trains and educates on workflow across the whole point of care suite. But it's not just point of care. Testing begets testing, and there's certainly opportunities to help the practice with efficiency with point of care testing, but also utilizing the reference laboratory as an extension. We see that as well, and then bringing it all together with IDEXX software. So we do what we're doing, what you're describing, but that's, you know, that's the job, and that's where practices are leaning in and wanting us to do more and more of.
That last point is really important, the impact of the software, right? And everybody's talking about AI, this, that, and the other, but the impact of your software in that specific niche to make those things move along quickly and get to those decision points, and whether it's enhanced or not, but it, right? I think that's a
Yeah.
strength.
I think it's unique to IDEXX's approach to the market. We have an integrated business model that we've been focused on organic growth for decades, you know, and it's with a belief in the long-term potential for pet healthcare. And if you look at how we've approached it, we've been agnostic to in-clinic versus reference lab. We want to support our customers in a way that makes sense for them, and it's integrated with software. We are adding to our capability around the software. You know, obviously the PIM systems itself, we're a leading cloud-based provider, work seamlessly with our solutions. We are wired into the practices, so we're basically able to add innovation to our instrumentations through, you know, on an ongoing basis. We're providing solutions that are getting at pain points. InView, the new solution that we'll be launching later this year is, you know, things like ear cytology and blood morphology are, you know, those are common, you know, kind of pain points within the practice that we can help solve. And, you know, we're adding to the capability of the practices to be able to engage with the pet owner and drive engagement with the clinic. So Velo, which is a, you know, is a pet owner engagement, is a key part of our future software strategy. We're excited about the opportunities that that's going to bring. And I think most importantly, when we're talking to our customers, we're talking about solving the problems that they're very focused on solving too. You know, to your point about how they're going to grow their businesses is going to be centered on services, and diagnostics is a key part of that. It's the most profitable part of the practice, and so we see this as a win-win. And you know, I'm really encouraged. We saw this significant expansion of demand in pet healthcare through the pandemic, and we're growing off of that. So I think we're learning to adapt and get ready for the next phase of growth in this sector, and very excited about how we get part of it.
Thanks. And can we talk a little bit about the guidance cadence, you know, just for this year? So I think for the second quarter, if I've got it right, the organic revenue growth guidance is about 6 to 8.5%, midpoint just north of 7. 1Q was 6.8%. So, you know, if you look at 1H, you might land around 7.
That's right.
Okay, full year is 8, obviously implies an acceleration.
Midpoint.
Midpoint, pardon me.
Yep.
Is 8, obviously implies an acceleration in 2H. I think you mentioned there's a day's benefit in there. There will be the launch of InView, right, that you mentioned earlier. Any other dynamics that you know that you want to call out in terms of what should aid that 2H versus 1H and the relatively modest acceleration that you have embedded in the back half of the midpoint of the range?
Sure. So, you know, just as a caveat, we're not updating anything today, but just reframing the guidance we discussed in our last call. To John's point, our midpoint outlook would imply approximately 7% organic growth H1. It would imply approximately 9% H2. So there's a 200 bip step up. 50 bips of that is days. You know, that'll be principally in the third quarter. We have some more favorable lapping second half of the year, John, in areas like LPD. As you know, China's been kind of a headwind in that business. We're working through that, targeting higher growth in our software business, our recurring software revenue, so that'll be helpful. And the underlying assumption on the things like the clinical visit growth levels, we're assuming a flattening of trends second half at midpoint versus the down 1.5 that we implied for the second quarter. So, you know, those are kind of the bridging items. We've captured the new platform launch in our outlook as well. But you know, it does rely to a degree on an improvement in the underlying sector trend, and you know, we continue to see positive dynamics supporting that. And you know, we're positioned to deliver good results, you know, within the ranges that we've talked about. And, you know, while we continue to invest towards the long-term growth potential that we see, we're very optimistic about the future for our business, and, you know, think we're in a good position to build on the momentum that we've had.
Okay. And one of the areas that you certainly have some solid momentum seems to be EMEA. You break out your EMEA and APAC revenue in your filings. You know, APAC, as you mentioned, has been sort of running into headwinds, largely factored by LPD. But I have 1Q24 EMEA revenue that was up 14%, sort of another quarter of mid-teens growth, and there's FX in there.
Yep.
But at a high level, EMEA seems to be showing some solid momentum. Can you talk about what's driving that? And then, you know, you do give us the CAG-DX recurring international, which is below that. So maybe just talk about the dynamic, and this would be specific to DX recurring, between EMEA and APAC would be helpful.
Maybe just in the clarification, I would say that Europe and Asia Pacific were similar in Q1. If you take out FX, and both very solid growth rates, and we're feel very good about the momentum that we're building there.
Yeah, yeah. I would just add, excited about international growth opportunity. Certainly Europe. You know, 7 commercial expansions, John, in the past 4 years. So that's, you know, part of it. Part of it is also really honing the commercial model that we've fine-tuned here in the U.S. In EMEA. The commercial team is not only expanded, but, you know, has the programs, the multimodality solution. You know, we've matched this with the investment on the lab side, as you know, not just commercial, but also with our investment in Kornwestheim, our largest laboratory in the world, which really forms the hub and spoke core of our European network. So we've got the lab service capability, we've got the point of care capability, we've got the commercial execution, and I think that combines to, you know, just to what you're seeing.
Okay. In terms of the overall traction, both in EMEA and APAC, within CAG-DX recurring. Okay. And I'm going to pivot a little bit. I'm going to go through the growth algo, and I've got the CFO up here, so I might as well pain you a little bit and go through this process. You know, look, we've done a lot of work on this over the past couple of years, and the CAG-DX recurring organic growth guidance to this year, so DX recurring is 8.5. The street's at 10 to 10.5 next year, 2025. We're street low, we're 9. And again, CAG-DX recurring organic. So for price, this year you're taking 5%, which was lower than last year. I would assume your 25 price increase is likely below this year's 5% contribution. We just sort of see inflation coming down. I know we've already had some panels today that have talked about pricing and how it's been pretty rich for the past handful of years. So if next year it's 4%, I'll still be above your LRP of 3. But if price steps down next year by 100 bips, and the street has you accelerating the 8.5 to 10 and change by 150 bips, you've got to find a 250 basis point accelerant from either visits or the IDEXX premium in terms of how we define it. Just walk us through that, Brian. Right? I mean, that, you know, street is like, what gets you there? What are the drivers? Would one be more than visits than innovation, vice versa, or do you see more of an opportunity, you know, with price being more durable than maybe I'm giving you credit for?
So just in terms of our growth algorithm as a company longer term, the biggest driver of our long-term growth is going to be driving adoption of IDEXX innovations and expanding utilization. So that is the core driver of the long-term growth that it gets at, you know, the premium that you mentioned.
Yep.
You know, and we're really excited about the momentum that we have on this front. I think our execution has been excellent as we work through, you know, kind of building out this higher growth post the pandemic and work through some of the clinical visit changes that have gone on. We continue to have excellent net new business gains. Our retention levels are as high as they've ever been, and we're really excited about the innovation pipeline that we've got coming to market that also supports things like our price realization. Do you want to talk about some of the innovation?
Yeah, absolutely. We've touched on a few, but maybe I can just add a little color. InVue, you know, very encouraging feedback, you know, from you know, customers as they're learning about InVue. You know, one thing to keep in mind is, you know, ear cytology, blood morphology. You know, when you're looking through the microscope, that's time consuming in and of itself. But recognize you're also looking at a slide. So every one of those slides needs to be created in the practice, which is technique intensive, labor intensive. So InView removes that. It's just fits so nicely into the vet lab suite of instruments with just like ProCyte and Catalyst, load and go. And so it's really encouraging, feedback that we have on InView. Brian mentioned Velo, also, to help practices with this client engagement, in supporting clinical visits. Very positive feedback there in terms of significantly reducing no-shows, and then providing prompts, including remembering to bring the fecal sample in, prompts during the visit, follow-ups. So these innovations, just back to that practice that I mentioned earlier, these are the things that practices are leaning into because they don't want the wait in the ER room, if you're the medical director, to be 2 hours or 4 hours, right? They don't want that. So they're really leaning into these technology solutions that we can help them with and help them grow faster and help them grow productively.
Brian, if I can just go back to, maybe the growth algo or the construct, sort of the A plus B plus C. So sorry, to get to the 250 basis point accelerant that I alluded to earlier, is there one variable? Because the way that I look at it is you have a lot of great innovation that's coming. You have InView, you got something else. You haven't told us yet, but you got something else. And then there's other, ongoing new tests that you're always rolling out. But those really wouldn't be a CAG DX recurring contributor so much in 25, right? As we've been through this,
build over time.
Yeah, you got to build it over time. Yep. So if the IDEXX, what accelerates the IDEXX premium if that builds over time? Price comes down, premium is flattish. Are you sort of, not you, or is the street making this bet on visits being the accelerant to get to the 10 to 10 and a half?
I don't know the answer to that. I do know what our focus is going to be on continuing to expand. We see a long runway for adoption of premium instrument install base. We had 8% growth year on year in placements in the quarter. We've got double-digit growth in our install base globally. That's benefiting from our ProCyte One, our hematology platform, which is expanding at a rapid rate, and continued growth in areas like SediVue, and now we'll have a new platform launched this year, and we'll have another platform to follow in the future. So I think we've got a number of things, as well as ongoing test innovation. I mean, we're continuing to expand like what we can do in that front. And as we continue to build these relationships with our customers, where we've got an ecosystem that is enabled by enhanced insight, decision IQ, we're increasingly leveraging the power of the data that we have access to and our knowledge across the sector to enhance the ability of clinicians to provide services. We're just very excited about our ability to continue to expand. And I think, John, obviously our long-term view is that clinical visits are going to expand. We see this is a sector that was able to grow 3% annually, including same-store sales. The clinics are adding practices. They're building new practices. In fact, we have specific programs targeted at customers that are doing greenfield clinic expansions that are enabled by our kind of solutions. So we think we're really well positioned to be aligned with that kind of growth, and we see that as a potential positive factor over time. So I think that's why we continue to have a long-term view about double-digit organic growth, and something that we're investing towards and earn really good returns when we're able to achieve that, and very, very confident in the long-term opportunity that we have for our business.
That's great.
Is there a component that people aren't putting in, or maybe you are putting into this? If there's going to be a massive aging dog population based off the COVID puppy pool, and that's coming 25, 26, 27. That's got to push your bottom line. That's got to be a massive.
It will be we highlighted this in, try to recall, I forget dates now, 2022, I think. When we saw the initial boom, I think we added 50 bips to the long-term growth rate, which was static, by the way. It was assuming the same kind of behavior. That doesn't assume that testing increases. It's sort of like if everybody tests the way they do today, over time, that should be a tailwind, to your point. And I think I'd add another dynamic to it, is pets are living longer. So that it isn't just that the existing pets are going to, there's sort of you know, I don't know what the analogy is, the rat through the python kind of thing. We'll see this puppy boom play out over time, but with enhanced care and capabilities, enhanced therapeutics that you'll hear about today, you know, the quality of pets' lives is improving and they're living longer, and there's a lot more diagnostic testing as they get older. So I think those are longer term tailwinds, you know, for us, and you know, we're trying to lay the foundation that will enable us to be really well positioned to help, you know, our customers grow when that plays out over time.
And Brian, just to shift over to innovation, you have a lot going on there. Maybe just for InVue, we should think about an overlap of a SediVue practice having a greater likelihood to be your early adopter of InVue. Is that a fair statement to make? You know, when we're kicking the tires.
Well, it's certainly a testing category that's solving a pain point in the clinic, and I think yeah, we would usually see, I think, early adopters being customers that are bought into the in-clinic solutions and willing to lean in on that. I think to Mike's point, there's very positive feedback because this is such a common, these are common use cases that people can, there's a direct line here. So I think and I'd add that I think our commercial capability is, you know, as good as it's ever been, even stronger than it was when we had a SediVue, you know, launch. So I think it'll, you know, have the kind of capabilities that we've been able to leverage, the cloud connectivity, and so we're and we'll be able to add to the testing menu, you know, as we launch. So I think it's yeah, we'll play that out. We point to SediVue as an example of how these things build, and I think that's a pretty good example of it.
Yeah. And one more, and then I want to leave time for the last, you know, or the next system. I always get tripped up on this a little bit. Will we sort of see running through the P&L a realized ASP of $13,000 to $15,000? I mean, your instrument placements have been so strong, but sometimes you could have a lower realized ASP because there's like an upgrade or an international that might carry a lower ASP. When we all sort of do our work and we're getting to InVue adopters, do we sort of see that translating on the P&L of a realized ASP of low to mid-teens in that regard?
Yeah, we'll get more specific with those assumptions as we get closer, but I think you know, there'll be an instrument revenue obviously component of it, and most of that gets recognized up front. And you know, the bigger story here is going to be there's a building new stream of recurring revenue, and even more importantly, it is another point of dialogue with the clinic to talk about, you know, adopting the IDEXX ecosystem and working with all our solutions. As you might imagine, salespeople are going to be quite excited about having something new to talk about. And you know, Mike runs our reference lab business. The lab business is excited about engagement with the customers on a new platform because we do 360 agreements that expand our reference lab business. So I think these are kind of things to your point that build over time. Kind of that's the nature of our business model, and so we'll look forward to sharing more on that, and you know, as we advance our thinking.
Okay, and in the 2-3 minutes that we have left, the next point of care system, you know, a few details to date, other than it exists. It will be incremental to the current point of care suite. There have been some thoughts, and we actually had a doctor up here earlier who alluded to a new system that might be a point of care screening tool for cancer diagnostics. You know, it carries this like massive theoretical TAM associated with it. But maybe you can talk to what went wrong for other offerings that have been in the market to date. You know, we saw PetDX, you had an agreement with them. I think unfortunately they've had to shutter. There's a Volition test, Nu.Q, that I think's gotten some mixed results. So maybe there is this massive TAM, but why have the current offerings arguably stumbled, and what has been some of their challenges?
On the cancer DX side? Yeah, let me add a little bit of color. You know, we say cancer, but you know, cancer is complicated, and it's multiple diseases and conditions, and you know, and sadly, it's the leading cause of death for dogs. So, John, to your point, I think there's a lot of, you know, focus on how do we bring earlier stage testing capabilities, and you mentioned a few of those. You know, IDEXX is already a leader in cancer diagnostics. When you look at clinical pathology, anatomic pathology, radiology, these are advanced consulting services that we provide to practices. About 1.5 million cases a year that we're supporting these suspected or cancer cases. But it's late stage, you know, it's later stage. And so what you see is, you know, focus on innovation. And I think this is an area certainly where IDEXX will continue to focus on innovation to, support the practitioners, whether it be general practitioners or specialists, with bringing that earlier, because we know if we can detect cancer sooner, the outcome certainly will be better. So I think it's a exciting area in the sense that we and others are focused on it, and we'll continue to innovate to help patients and practitioners in this area.
And as someone who runs a reference lab, why is this a point of care test and not a reference lab test in that regard? I mean, you always hear about greater accuracy, better sensitivity, specificity, at the lab relative to point of care. Why would this be a point of care test?
You may know I ran the point of care business for 15 years as well. So what we've done over time is bring reference lab accuracy to the point of care. You see that with InView, you see that with ProSite, you see that with Catalyst, and so it's a high bar to bring that to the point of care. But because we're in both modalities, we know how to do that, and then we also bring these together because practitioners, they want to use both. They want to use both. You may have back to that emergency practice, point of care, real-time results, essential. But you may need more comprehensive results, from the reference lab. Alternatively, you may start with a preventive care panel at the reference lab, and then you're going to monitor something ongoing because 1 in 4 preventive care panels, something discovered more. So it's a combination, but it's about bringing I think to your question, these are reference lab quality platforms.
That's
for example,
occurring at the point of care.
For example, InView to the point of care.
Okay. And so maybe just to conclude, when we look at those tests that were out there that arguably haven't gained a lot of traction, would the thought be, and I'm oversimplifying, but maybe the PET-DX price point was a little high, the Nu.Q sensitivity, specificity could be improved. There's this gap in the market where IDEXX can go ahead and capitalize that between maybe more cost-effective, better accuracy, and in there somewhat.
Well, in general, diagnostics is certainly a performance category. So what you described in terms of, specificity, sensitivity, what have you, on a given diagnostic, not just cancer, is essential, and and price point is important as well. And certainly to get this early stage, you really want it part of the preventive care panel, right? You want that in the screening panel. So price point is important as well.
Okay. More for you, but we've got to stop there. As always, guys, I really appreciate it. Thank you.
Thank you,
John.
John. Thanks, everyone.